Building a truly pensionable India is no longer just a social security objective. It is an urgent economic imperative.
You'll be surprised that EPF is not mandatory for persons who earn more than 15,000 rupees a month.
One of the good suggestions we got, in fact, from the team at KFintech when we were here last time was how to better utilize the NPS account, and your suggestion for making NPS as a collateral was absolutely great. 60 is just a retirement age at government. It has no meaning for people like yourself. So we need to look at getting rich before you grow old. And I think in the last 6 months, we've seen very substantial results for a Vatsalya campaign. The sheer statistics indicate that the earlier you start and the longer you allow your money to grow, the better off you are. We have to be able to make NPS better tuned with customer requirements.
Hi everyone, my name is Hanisha Varlamani and I'm the Chief Brand Officer at KFintech. We often talk about India's demographic dividend, our young, vibrant and massive workforce driving historic economic growth. But as a nation, we face an equally massive, quiet challenge on the horizon. What happens when this young workforce grows old? Today, India is experiencing an unprecedented retail financial revolution. Millions are entering the capital markets through equity SIPs and demat accounts, chasing short-term wealth creation. Yet, our pension assets as a percentage of GDP lag far behind global peers. Building a truly pensionable India is no longer just a social security objective. It is an urgent economic imperative. To unpack the roadmap for securing the financial future of 150 crore citizens, we are deeply privileged to have with us a leader whose career sits at the perfect intersection of public finance, corporate governance, and digital infrastructure. Please join me in welcoming the Chairperson of the Pension Fund Regulatory and Development Authority, Shri Sivasubramanian Ramann. Mr. Ramann, thank you so much for agreeing and coming to our office for this podcast recording. I look forward to a lot of insights and the way forward to make India a pensionable society.
Thanks, Hanisha, and it's great to be here at the KFintech office. I'm sure we'll have a lovely discussion. So let's get started.
Mr. Ramann, India is clocking historic highs in the mutual fund retail participation and equity demat accounts. Yet pension assets as a percentage of GDP lag far behind peers like Australia and the US. So how do we shift the Indian consumer mindset from a short-term wealth creation like the equity SIPs to a long-term retirement security?
So Anisha, you've put your finger on a very important point. We have to recognize pensions as a separate instrument in which people can invest. The first and foremost thing I will say is mutual fund is a totally different product. It is liquid. It is virtually serving as an ATM for many of the likes of you. You will probably put in money and you don't care when you take the money out. If you have a particular need, you will immediately take money out. Pension behaves actually the opposite. So we at PFRDA, in fact, we sometimes pride ourselves in being the difficult person or the obstacle to take out money. We believe that you should not take out your money. You should let your money lie there, invested, and you keep investing in whatever frequency you like. But the more you keep your money invested for a longer period of time, undisturbed, you are going to get the power of compounding. And that is truly what is the long-term effect of saving. This is really the point which we need to carry forward. And I think PFRDA has been remiss in not being able to create this sufficient, campaign and information and awareness amongst the people of India that there is something called NPS, which is good for you because it is there in the time of need when you are probably not working or you decide that you don't want to work.
The Employees Provident Fund, EPF, is mandatory for corporates, but a universal pension framework is not. Do you envision a policy shift where corporate pensions become legally mandatory? Or do you believe that market driven flexibility through the NPS is a better route for India's pensionable society?
Again, I think you're touching upon incredibly important points. You'll be surprised that EPF is not mandatory for persons who earn more than 15,000 rupees a month. Now, this is not a fact that is normally known. So, let us go back into history. EPF is a 1925 Act taken over by a 1952 Act. EPF, that is a Provident Fund. The pension scheme of EPF came in 95. That pension scheme is mandatory for persons below the threshold. It used to be 6,000 rupees, it's now 15,000 rupees. It might go up in the future. The concept of Provident Fund is a forced saving. People were told that get your money deducted at the salary level so that there is a saving that happens. This forced saving was again within the threshold. So, above the threshold of income, EPF is actually a voluntary scheme. Now, I think it's great what EPF has done. Everybody in this country who's in a corporate job knows that they are getting a fixed return every year, which is tax free. Lots of people have benefited tremendously from it, and therefore I think it has served its purpose very well. But our job at PFRDA is to basically create a harmony between the various pension products. From the interest of the customer, if you ask me, if there is competition between different products, that's even better. Because then the customer gets a choice of where he would like to invest his money. Given that not too many subscribers find it easy to choose. So we have to make simple products. EPF is a simple product. You get deducted at a salary level and you are saving your money. But EPF has a limit to how much interest you get because it's an interest that is obtained. NPS is a market-linked product which does not give you a fixed interest. It's a varying interest depending on the kind of scheme you get into. So we need to make sure amongst all the people of the country who are largely in the formal sector, and which is a very small percentage, that EPF and NPS are available as choices. You need to make the choice. You can be in both. It is about the way you think you want to take forward your future savings.
So, I tried to sidestep your question of whether NPS should be mandatory or voluntary, but I think NPS is better off being a voluntary scheme. In fact, EPF or NPS, it's really a matter of providing simple choices to the customer. Let us allow for the customers to be better educated. And I think that's a significant point because without the awareness, without the understanding of what your money is going into, you will then put the blame on somebody else. So I think when we talk about this segment of customers of the country, which are generally higher educated, who have an understanding of the financial markets, I think it's important that we provide more awareness and information to them and allow them to make a choice.
Mr. Raman, you've been talking a lot about the awareness thing. So I cannot stop myself from asking this as a marketer myself. Do you think, like Mutual Funds Sahi Hai campaign has tremendously affected the way all kinds of age groups and demographics invest in mutual funds? Do you think there is the need of the hour for NPS or PFRDA, for that matter, to start something like that, a campaign which will really influence people and bring that awareness?
In fact, that hour has long passed. We should have started many years ago.
Right.
The Mutual Fund Sahi campaign has been brilliant.
Right.
And I think it has managed to, sort of penetrate even the youngest of minds. The very fact that we've got a set of celebrities who have, come and talked about the product and have explained the product in a very simple way. NPS has to do this, and we're already working towards it. We have already increased the visibility of NPS through a variety of means, including and mostly social media. But I think it's very important for us to also bring to focus using the kind of campaigns that we have seen. So, in fact, both the Sahi Hai campaign and the RBI Kehta Hai has also been a very impressive campaign,
Right.
which has been largely on the safety and security of how you deal with your money.
Correct.
Now, NPS is a product which is, if you ask me, as important to a person of any income level. The moment you open a bank account, the next thing should be open a pension account. You are mentioning that people at a younger age don't even care for something called pension. I totally agree with you. Let's not even call it pension. It's a long-term saving for income at a later stage of life. This is something which we need to bring to the information of everybody, whether it's 22 or 25. You still need to think about the fact that there is a future. You need to live. We are all living, by the way, for much longer than what was predicted.
Absolutely.
So 60 is no longer a number. 60 is just a retirement age at government. It has no meaning for people like yourselves. So we need to look at getting rich before you grow old. So I think that is really a mantra which I heard from someone, and I've been sort of using it. So why is it that we're not encouraging people at a younger age to put their money into an asset allocation which is what we may call as aggressive, but it is suitable for that age, because you can ride out the equity cycles as they happen. We're probably now going through an equity cycle which is on a downturn. We saw the last one very briefly during COVID, but before that we had the global financial crisis. So we are talking about equity being held for periods of 20 years or so to get the benefit of the cyclical industry movement. NPS is actually that. NPS is that long-term product. NPS is about a minimum vesting period of 15 years. So we definitely need to bring in a campaign nationwide which penetrates. And for me, the penetration is not at an urban level. I actually am looking at going to those 30 crore odd Indian families which are semi-urban, rural. In fact, my visits to the rural areas have taught me a lot. In the last more than 15 years, I've been continuously going into the areas. There is a lot of aspiration. So actually, we should not call them rural anymore. We should call them the aspirational class, because that is what they are. They are more hungry than you and me to make their lives better. And they need proper services. They need a variety of services, including that of financial products and services.
So you also touched upon a brilliant segment of investors. You said aspirational, people. So the Pensionable India, it lies majorly in the people who do not have a paycheck. Say, they could be the gig workers, they could be the daily wage workers, or even freelancers for that matter. A lot of younger generation is now freelancing. The core challenge to a pensionable India lies in our informal sector and the booming gig economy. So these days we have Swiggy, Zomato, and multiple gig economy workers where the structured monthly paychecks do not exist. How can PFRDA build an infrastructure for a citizen who can only contribute, say, 5 rupees or 10 rupees a day dynamically based on their daily cash flow?
So the perennial and most difficult problem in India is reaching to the various corners of the country, to the various depths of till yesterday unconnected India. So today, why is India so connected? We've got probably the best road network system anywhere in the world. We've got a telecom system that has penetrated every household. So as PFRDA, along with all our partners and intermediaries, our job is to make sure that we touch the hearts of every family. It's really about doorstep financial services. We've heard about doorstep banking in the absolutely unprecedented movement called Jan Dhan. It has worked brilliantly. It's brought 60 crore people into owning bank accounts. My goal is really to replicate that for NPS and Atal Pension Yojana, which is another sister scheme of NPS. We operate Atal Pension Yojana under PFRDA. We make sure that the distribution system is robust. Between these two products, Atal Pension Yojana is for the poorer segments of society, which typically we have defined as the non-tax paying segment. It's a very, very large segment. In that segment itself, NPS and APY both will coexist because APY has certain limitations. You only will get up to 5,000 rupees a month as your old age pension. A lot of people in the aspirational classes are aspiring for a much higher amount of money, and therefore for them to come to NPS is but natural. We have divided our own workforce at PFRDA to be able to segment our audience better. The moment you segment your audience better, the tools and the media and the kind of promotional activity that you do is better suited for each audience. So we've got an agrarian or a farmer based outreach program which is doing more than 100 programs in a year. This will obviously be in tier 3 and 4 towns. We've got a separate team which is looking only at the smaller MSMEs. So we have about 350 odd MSME clusters. We are reaching out to those clusters where we know that there are several thousands of workers who may or may not really know about NPS. Hopefully they are within the EPF system because they are probably below that threshold and therefore they should come under EPF. But we have to bring the concept of NPS to them because everybody would like to save their money in a manner such they have total control over it and they know exactly where their money is and they can also understand how to utilize their savings better, which NPS schemes they can use. We have another segment which is actually targeting these self-help groups. It's something that we're doing with the help of the Ministry of Rural Development, and we are going to launch this in a big way where the Pension Sakhi will become like the BC Sakhi which already exists. So we can at least bring awareness to 9 crore women who are there in these SHG groups and bring to their notice that there is something called NPS. Hopefully many of them, because today Atal Pension Yojana has crossed 9 crore subscribers. So we are hopeful that most of the SHG women would probably be part of the APY program. But we would also like them to understand that there is something called NPS.
I have a question here, Mr. Raman. For the people who are earning as a daily wage, do you think having a 5 rupee or a 10 rupee contribution on a daily basis will compound better and it would make the contributions much simpler and easier through UPIs?
Correct. No, you said it. That is exactly what we are trying to do. In fact, we have even changed all the rules. So earlier, the subscriber had to pay money in order to subscribe or contribute whenever they contributed. We've completely done away with that. So I should not need to pay money to be able to contribute. So we've changed the rules entirely so that people have the ability and therefore the freedom to put money into the NPS system anytime they like. We have got just on the anvil, very soon we'll be launching a large program of distribution through what is known as the BHIM or the NPCI network. This will allow for the UPI providers. So today, 90 crore people in India are on some UPI mechanism. All of us know how to use UPI. This is the same set of TPAPs as they are called, the Google Pay, Phone Pay, BHIM, etc. They will be able to now guide their customers onto NPS. And it's a 3-click process for them to open an account, after which it is just a matter of using UPI to make the payment. So you're completely right. I mean, if we are not utilizing and exploiting the brilliant products and the ecosystem of payments that has come about in our country, we would be really, going wrong in our strategy. So that is completely on board. We're also looking at a vast distribution network using what is known as the star NPS. So already the BSC has got something called the mutual fund star platform. We have replicated that fully because it's worked very well over there, and we have created the star NPS so that many people who can serve as pension agents will be able to onboard a vast number of people. Again, we are saying this is within urban cities as well as within the non-urban centers. So we are expecting that with this digital networks that we have managed to create with our partners, we certainly will be able to excite many more people despite having the lowest commission for the distributors. And I think that's the big difference between NPS and mutual fund. And I don't wish to really, get into it too much because that's the way the products are created. NPS is a very, very low cost product. It is meant for people to be able to easily come into it. And I think we are just telling the people that it's the smallest amount of commission that they would ever pay. And therefore, over a 20-25-year period, this translates into a large difference between the returns you get in NPS as compared to mutual funds, which also, let me say, surprised me the other day when my own team told me that some of the best NPS products, if I were to look at a high equity allocation, when I compare them with the mutual fund, they're not very different in terms of returns.
Wonderful. So earlier you touched upon a point where you said you're focusing on the women groups, self-help groups. You also have launched NPS Vatsalya. There is NPS Swasthya. So it is very interesting that PFRDA is focusing on each and every individual age group and workforce. Could you please explain how NPS Vatsalya could be, starting from the childbirth itself, the minute you take a birth certificate of your child? Do you think it can be made mandatory or given an option of, investing for your child's future?
No debate on this at all. The very fact that you catch them young, as you say, the emotional, sort of underpinning to saving for your child is there in all of us. And it's been there in humanity ever since the beginning. And I think it's just excellent that we have crafted, and you may not know this, but the Honorable FM herself had a very big hand in sort of the initial design of this particular scheme. And she has really been keen that PFRDA push this forward. And I think we've taken it very, very seriously. And I think in the last 6 months, we've seen very substantial results for a Vatsalya campaign, which we have once again, put a lot of effort into. And this will only become more. The sheer statistics indicate that the earlier you start and the longer you allow your money to grow, the better off you are. And I think given the way India is going to perform, all predictions are that over the next 25 to 30 years, this is one economy in the world that's going to still continue to grow at 6 and 6.5% upwards. In that scenario, for the common person or the rich person or whichever educated, not so educated, I think everybody cuts across on a humanity level when it comes to the future needs of their children. And given the way that education is that much more expensive, the fact that we'd like our children to move into different kinds of occupations, it makes a lot of sense. The product has therefore been redesigned to meet the various requirements. So it's not at all a rigid product. I think we have learnt very well by getting feedback from the market, and we have therefore created the right tweaks. Between the ages of 18 to 21, you have numerous opportunities to take your money out. 80% of your money can come out. We're still saying keep 20% for the future. because your life is only just starting. That 20% can continue in NPS for a much longer period of
So
time.
you're saying that the NPS Vatsalya scheme is going to convert into a individual.
Absolutely
Oh,
right.
wonderful.
Correct. So if you, for a moment, do not need the entire money,
Right.
80% is there for you to use for education, for starting your small business, whatever it might be. That 20% is something which is better kept invested, because as a human being, you will want to continue to work, you'll want to continue to save, and NPS is that very good long-term saving. So, there's dovetailing of an NPS into Vatsalya at the ages between 18 to 21, and 18 to 21 is also something we very specifically introduced, because it's very difficult for people to take a one-shot decision. You need some period of time, you need some sort of to and fro before you take these decisions.
NPS relies heavily on the CRAs, POPs for onboarding and grievance redressal. Recently, PFRDA revised the onboarding fee structure and the digital mandates for POPs. How do you think these operational changes will balance the profitability for your partners with low cost efficiency for the end subscriber?
So we need to look at this from a perspective of, there has to be some money for the distributor, and the distributor, so let us say that we have much more than the banking segment as distributors. So the mutual fund distributors are now scattered across the country, the number nearly up to 1 lakh. We are looking at much more than that. We are saying all cooperatives in this country should become distributors for their cooperative members. And you'll be amazed as to how large a cooperative sector we have in this country. If I were to take only the milk cooperatives in about 7-8 states, excluding Amul, which is the giant, you still have over 3 crore people involved in that particular milk sector. So we have immense opportunity to go into what we're calling as the informal sector, to be able to distribute NPS to them. It is therefore imperative that we provide some commission to the distributors. We have tried to do that. As I said, it's a very low cost product from a customer point of view. Therefore, it is a total of 0.3% of AUM on an annual basis that is payable by the customer, and this is not even paid by them directly, it is just taken from the NAV like the mutual fund industry does. So that conversion we have done. So it's a seamless process from a customer point of view. We are definitely keen that the CRAs, which constitute a very, very pivotal role in our system, they will benefit by the fact that we have now tuned our charges for the CRA closely to what is there in the stock market for the depositories. So there is a variable figure depending on the size of the AUM. So we are quite sure that with the growth of the industry, our partners will certainly be able to get a good remuneration and a decent profit. What is more important for us is that we come together and we exploit the synergies of the digital system. And that is really where I think a lot of work is being channeled. We're working very closely with all the CRAs to be able to improve our digital systems, reduce costs, even change some of the processes, because the more digital you get, the safer you are. Actually, if you ask me, NPS is a risk-less product when it comes to the operational risk. It is risky from a market risk perspective, that is equities, corporate debt. Obviously, these are instruments which go up and down, but from an operational risk perspective, I think we are soon going to be close to having near blemishless operations right through, which therefore takes away that, earlier that fear was that what will the POP do with the money? Will the POP take the money and run away? Will he remit it properly on time? All that is gone. So in a digital system, both information and payments are completely within your control. And I'm sure we're going to have NPS even at the rural village level. It will be an assisted journey, but fully digital.
So, Mr. Raman, how seamlessly does the NPS backend integrate with the public financial management system, the PFMS, and the DBT architectures to ensure that the government co-contributes or welfare-linked pensions reach the rural accounts without any leakage?
Wow, now you've expanded the horizon. Great question. In fact, couple of state governments have actually, in the context of Vatsalya, have said that why don't we look at merging the schemes that the state government runs for its own citizens, for the children, and make that money come into a Vatsalya account for those children. So you realize that state government is giving a subsidy or a, it's like a dole. It's so much money for the children at below 5. So there are various schemes across various state governments. 2 state governments have approached us after discussions with them, saying that they are looking at how to integrate that distribution of money into the Vatsalya account. I think this is brilliant. And this is really where it takes us to the point which you mentioned, that we certainly will be able to integrate with any other digital system, because this is how they are typically created. So it's a bunch of APIs that you need to write between the 2 systems, and we'll be able to transfer information to them or draw information from them. The payment system, of course, is the same. So, whether it is this or the state government system, it's through UPI, and therefore there is complete, sort of transparency in that. But I think it's a great move forward, where both in Vatsalya, and there is one more product that we are still, let me say, in the experimentation stage. We didn't really talk about it, but it's called NPS Swasthya. And the NPS Swasthya has got an even more powerful message and service benefit that can go to the people. Very quickly, we can look at how the health needs of people are taken care of, whether it is state government helping them or whether it is through NPS Swasthya. We can certainly look at future integrations. But the way Swasthya is designed is really for each person in the country, the richest of rich also, to be able to hold some money dedicated in a medical emergency account or in a medical kitty, so that their medical needs at a later stage of life can be met by this dedicated fund, which is linked to their pension accounts. More importantly, we are now bringing together the concept of a top-up insurance, which will sit on that Swasthya account, such that I pay my deductible for my medical requirements. So if any inpatient, hospitalization will require an insurance to come in, but an insurance never really pays the full amount.
There's a copay involved.
There's a copay, absolutely. So copay or deductible is what we will pay to the hospital directly from the Swasthya account. So if I pay in 50,000 rupees, my top-up insurance may be for 3 lakh or 4 lakh. The insurance company will then come with its copay part and take care of the remaining part of the hospital bill. So there are 3 options that we are working with right now. So you can have 50,000, 1 lakh or 3 lakhs. And correspondingly, there will be a top-up insurance of 3 lakhs, 5 lakhs, 10 lakhs, 30 lakhs. Those are the ranges. This has caught on very well in the experimentation or POC stage. And therefore, very soon we hope that we'll be able to bring in large number of people with premiums of top-up being much lower than what is there in the market as an individual, because now you are coming as a group. So we've got the pension funds to talk to the insurance companies who provide top-up insurance. They will be able to, on an annual basis, pay the premium from the Swasthya account for the top-up insurance. And whenever the person has that need to get into hospital for some intervention, and we're looking at this more from the sort of critical illness or the catastrophic phase, and we're saying that your deductible or copay will be paid from the Swasthya account, and seamlessly the insurance company which has given you the top-up insurance will come in with their share.
So, Mr. Raman, we were also talking about how technology is the way forward for the products of NPS to take shape. So, how are you making use of the available technology in developing and shaping the next level products?
So technology is really a tool, and I think one of the, something very close to my heart is the fact that with the amount of growth in AI, we should be able to look at how AI is genuinely working for the benefit of the large number of people in our country. You and I can get advisors to give us information, advice. We may even be happy to pay for that advice. In fact, some HNIs in this country are given advice by the financial planners, and it's a very good service that has got started in the country. But what happens to the large number of people who need the advice but are willing to pay only small amounts of money? This is where the digital technology has to kick in. And my view on this, and we're running a small experiment which we have started, is this cannot be run on the basis of some LLM. I have no problem, let the LLMs do whatever they want, but LLMs do not provide 100% accurate information at all times. Such advice, typically like, in the field of medicine, you cannot have a situation where you have wrong information coming to you through some set of LLMs. You need 100% accurate information. So we have decided that what is really needed is an information layer. A deterministic AI is what they call it. It's also known as explainable AI or auditable AI. That is really the field which will go forward. It's like the information is conversational at the subscriber level. We have now got Bhashini, which we have integrated with. It's got 22 languages behind it. So we believe that making every Indian empowered with his ability to speak into an LLM. So that is the LLM part. But the LLM will carry the information through my information layer, which is the deterministic rules, and the net output will be something that is accurate. So we will make sure that only accurate information is emerging from this play of information of the profile of a customer when put against a set of rules of NPS. And therefore, the advice that comes to the customer will be something that is very clear. There'll be options, but each one of them will be accurate. This is really the dream that we have sort of set about trying to achieve. But at a more practical level, in fact, one of the good suggestions we got, in fact, from the team at KFintech when we were here last time, was how to better utilize the NPS account. And your suggestion for making NPS as a collateral was absolutely great. So that's something that has gone forward. So again, we're using technology where fintechs will be able to use the CRA system, lock into an NPS account. It will get so-called pledged for a particular amount of money. I am better off putting my NPS account as a collateral while I continue to earn market returns. And I'm taking a loan against that NPS where the loan percentage may be much lower than the market returns I'm getting. So I'm actually benefited twice by getting liquidity from my NPS account, paying a lower interest and earning higher market returns on my account.
And not losing the power of compounding.
And not losing the power of compounding.
That is very
correct.
important.
So I think there are innumerable ways that technology can help us. It's for us to probably, listen to what the market says, get the, sort of fintechs and the other people who are closer to the customers to be able to get a feedback.
Absolutely. So in my personal experience, a lot of my peer groups, people started investing and, most of their accounts have gone into dormancy because, it's not a corporate NPS and it's a voluntary contribution. So how are you looking at technology to reduce the dormancy of accounts?
No, this is really going down to the nudge behavior. I mean, you have to be able to nudge people, and that nudge has to happen at a very wide scale. And I think really it's about using technology, whether it is through the sort of influencer, social media, or technology using the payment operators. There is a wide variety of how to bring nudges to the notice of people, and how do we get them to relook at what is their own individual strategy. Because I agree with you, people sometimes forget about their account. Sometimes they think, oh, this is not working very well because there's a bit of a market downturn. So I think, giving them small bits of information in multiple different ways using technology is probably the only way to do it, because otherwise these things become terribly expensive.
Mr. Raman, we both agree that technology is the only way to achieve financial inclusion, especially at a population scale of 150 crores. How is PFRDA leveraging AI, account aggregators, or the most widely used UPI-based auto debits to reduce the onboarding friction and probably proactively prevent account dormancy?
Sure. So I think the whole concept of a SIP, as known in the mutual fund industry, has proved very well for subscribers. And I think the fact that there's something just automatically happens in the background is very good for us, because when one day we wake up and we say, oh great, so much money has got collected. So I think there is a lot that we need to understand human behavior and be able to sort of tune our tactics in closer to how human beings want. And therefore we have to be able to analyze and use the data to be bringing out the analytics which show that these are the cohorts and these are the cohorts which are behaving similarly, and therefore address each cohort in the manner that is needed.
Wonderful. So before we wrap up the conversation, if you were to set a definitive benchmark for success over the next decade, whether in terms of total AUM growth or the sheer number of active pension accounts, what does a successful, fully secure, pensionable India would look like under your leadership?
No, my leadership is very, very secondary. So, that's not the important part. But I think the very fact that we have a growing, robust system with PFRDA, the pension funds, the CRAs, and the swathe of banks, rural banks, the regional rural banks, the cooperatives, the variety of pension agents who are now interested. In fact, small fintechs are able to get groups of 10,000 and 15,000 customers for whom they are providing several different financial products. So I can never look at NPS alone. You, me, none of us will just look at NPS. We need 4 or 5 different products, and that's where the balance between all these products is very important. So I think NPS is one part of a customer's journey, and the moment we look at it from that point of view, we get the right perspective. It's important for us to drill down and be able to convey the message of NPS very well, very simply. NPS Sanchay is a product we have created for the informal sector, where they don't need to make a choice of investment strategy because people find it difficult. So, we've found this as a hook where we're saying that the same investment strategy for a government servant will apply to you also, which has proved very well for the government officers. So, we have to be able to make NPS better tuned with customer requirement. And I think that if you look at it from a leadership point of view, that is the biggest message that I have learned, that how do we recognize the customer in a better way? It's not just a homogeneous group, the variety, the needs, they're also different. And therefore, tuning the NPS products, making the pension funds to get a better set of assets in which they can invest money. That's again a very important part for ensuring that the returns remain robust over a period of time. And of course, I think, using technology to lower costs so that, the NPS system is recognized even by the smallest of distributors as something that is giving them livelihood and which they are happy to remain part of the system.
Absolutely. One size does not fit all, and especially in a diverse country like India, we have multiple work groups and multiple economic sectors in the country, and it's very difficult to design one product which will suit every economic group. So as a CRA, KFintech, how do you think we can help achieve PFRDA's goals to make India a pensionable society?
So I think you guys are at KFintech sitting on probably the best, set of technology and tools that are available in the world. I've seen your operations. Of course, the mutual fund operations are brilliant. There's a lot to learn from the mutual fund operations. That apart, globally, there is so much that KFintech does. So, I think it's about bringing in the best of what you have seen and therefore bringing it and modifying it to the requirements of the Indian society and the Indian set of rules and the customers. And therefore, KFintech is in that particular, sort of sweet spot where it can marshal its thoughts and its actions from across a variety of financial products and services. And that, I think, is really the way forward, because, as I said, no financial service or product is a standalone silo. They all sort of fit into a larger portfolio of what the customer needs. And therefore, if a customer can actually look at getting serviced for their financial products from a single window, think of the convenience, which is something which India has not seen, because we have, sort of different regulatory, spheres. But from a customer point of view, it makes so much sense to get served in a single place for all your requirements. And that, I think, is a really sort of useful way of thinking of the future.
So ease of doing business in terms of
ease of living, as the Prime Minister himself has said.
Absolutely. Thank you, Mr. Ramann, for such an incredibly insightful, candid, and forward-looking conversation. What stands out most from your thoughts today is that a pensionable society cannot be achieved with a one-size-fits-all approach. It requires a delicate, powerful balance, scaling cutting-edge digital infrastructure like AI and UPI for our youth, while simultaneously engineering ultra-low-cost, frictionless micro-pension networks for the informal and gig workforce at a grassroots level. I think the blueprint for the next decade isn't just about growing a massive AUM numbers. It is fundamentally about institutionalizing lifetime trust and financial dignity for every single Indian. Thank you so much for your time with us.
Thank you, Anisha.
Thank you. If you found this conversation insightful and informative, do share it with your friends, colleagues, or anyone who could benefit from it. Don't forget to subscribe to the KFintech YouTube channel for many more such meaningful conversations and expert insights. Thank you for watching. Bye-bye.